It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks lower across the board. 39 minutes to go ahead of the closing bell. This Bloomberg Business Flash is brought to you by Home Title Lock. Homeowners, when was the last time you checked your home title? Go to HometitleLock.com/Bloomberg for a free title history report to make sure you're not already a victim of fraud. That's HometitleLock.com/Bloomberg. Stocks lower across the board because of concerns over escalating Middle East tensions and weak economic data. The S&P down 45, down 0.7. The Dow down 296, also down 0.7%. Nasdaq down 157, drop there of 0.8%. 10-year at 4.38%. The 2-year ahead of the Fed decision tomorrow, 3.94%. Gold flat on the day now, down under 0.1%, 33.82 the ounce. And West Texas Intermediate crude up 4.6%, 75.10 a barrel on WTI. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. When the word uncertainty is used over and over, we lean on other factors and metrics to help define a time period. That includes something like global real estate, Carol, which of course is sensitive to macro factors like geopolitics and, yes, the interest rate environment, which we just discussed with Mike McKee.
Yeah, one company with a view on all of this is JLL, former Jones Lang LaSalle, the publicly held global professional services firm specializing in real estate investment management. Travis McCready is the head of industries leasing advisory in the Americas for JLL. He's also chair of the JLL Global Life Sciences Advisory Board. He oversees brokerage and advisory for the company's key global industry verticals. So we're talking about life sciences, healthcare, data centers, energy security and defense, technology and higher education. There's a lot going on. So let's get to it. He joins us from Boston. You've got to be a busy individual, or maybe you're not. This is what I want to ask you.
You're not busy. Of course he's busy. He's got screens on screens in there. He's very busy.
You do have
screens on screens on screens. Yeah, I'm busy.
Well, listen, as Tim mentioned in the lead up to you, that when there's uncertainty and folks are saying uncertainty a lot, heads of companies are saying one of our conversations on global shipping, uncertainty came up a lot. You know, where are you the busiest? Region of the world, area of the United States, category of real estate? Give us a picture, and where are you not busy?
Wow. I'd say uncategorically, without doubt, we're busiest in data centers, which is an area that affects pretty much every aspect of the economy, every vertical and technology vertical that we cover in real estate. Our ability to bring online additional data centers across the United States is a rate-limiting factor to the growth of pretty much all our verticals. In that regard, data centers are popping up anywhere that there's a correlation between access to power, access to the right amounts of land, and cooling infrastructure, which would include, of course, water and wastewater. So that's my area of biggest activity levels. Second being advanced manufacturing. And that's manufacturing, whether it's for semiconductors or for biologicals. We're seeing a nice steady clip of activity around advanced manufacturing across the United States.
I'm wondering how you look at the protectionist policies that the Trump administration, I won't even say toying with, the protectionist policies that the Trump administration has established or has actually put into action at this point. We're talking tariffs, we're talking about other ways to keep jobs here in the United States and keep manufacturing here in the United States. How has that affected your business?
Yeah, I think there's these policies are still, a lot of them are still in theory. So it's the uncertainty around these policies and how they'll play themselves out in practice, which is really driving a lot of decision-making, or in many cases, lack of decision-making by a lot of our businesses from a real estate standpoint. We definitely have felt, post-COVID in particular, the desire for businesses to control their supply chain. And this desire is really what's driving the advanced manufacturing sector. We've definitely felt a desire for increased employment around advanced manufacturing, particularly as it relates to semiconductors and energy and the like. So these policies haven't really had the type of effect that we think that we've wanted them to have, partially just because they haven't been implemented in many cases as of yet. The one policy that's really gotten a lot of our folks in the life sciences in particular spooked is the most favored nations clause. And this notion around MFN pricing really shifts the algebra around pharmaceutical prices, and then in terms shifts the discussion about profitability and plowing some of those profits back into the R&D enterprise. That's really having a deep structural effect on how our pharma companies are thinking about manufacturing here in the United States.
So play it out. So meaning that they're going. You mentioned the number two busiest area is advanced biological. So the thinking is, okay, especially pharmaceuticals, doing more, manufacturing more in the United States. And what about Puerto Rico? I thought at one point we were doing a ton of manufacturing there. Is there?
Oh, we continue to do a ton of manufacturing in Puerto Rico. In fact, next time you go to the drugstore to buy Tylenol, thank the Puerto Rican manufacturing ecosystem, because that's where 80 to 85% of all the Tylenol in the United States comes from. The advanced manufacturing, however, we're talking about proteins, biologics, cell and gene therapy manufacturing. A lot of that's happening in a smaller scale and happening domestically within the contiguous 48. That's the type of manufacturing we've seen be announced post-tariff conversation. We had about $27 billion worth of those announcements. The degree to which those announcements come to fruition, however, is what we're waiting to see. There's still a lot of uncertainty around both the tariff conversation and MFN conversation, and that will drive the degree to which, or the rate at which, those manufacturing facilities are actually executed.
I wanted to talk geographically a little bit with you because you've got such a great view on what happens around the country and around the world. For the ever since I've been doing this job, the Sun Belt, we've been talking about it growing and growing and growing, and I'm starting finally to see a shift when it comes to the Sun Belt, some weakness happening there right now. And I know you don't specialize in residential. That's where we're starting to see some weakness, but certainly commercial is tied to residential. Tell me what you're seeing in the Sun Belt.
Yeah, the Sun Belt's in both an exciting and slightly risky part of the United States right now from a real estate standpoint. On the one hand, you're absolutely right. We're seeing demographic shifts into the Sun Belt, into the southern United States, and with that flow comes commercial activity. On the other hand, we're also seeing structural weaknesses in the grid in particular, and the energy needs that these advanced technologies, whether it's semiconductors. Or even our healthcare clients, the energy needs that they're demanding, we're increasingly having difficulty finding those sites, finding that power infrastructure in order to satisfy the commercial demand. So you're absolutely right. The point of signal strength, obviously, that we'll see first is around residential. But the safety, security, strength, and growth of the grid will dictate whether or not we can continue this growth pattern going forward.
We've actually had some really deep reporting on this here at Bloomberg, this idea of, folks that play into kind of the electrification play, the power demand, whether it's through data centers, that we just don't have the skilled workers to do it. And it's not just a U.S. thing, it's actually a global thing. And I'm just curious, from your perspective, which is the real estate play, are you seeing, you said data centers, that's your busiest area, but are you seeing somewhat any kind of pulling back or slowing down because there isn't either the labor to supply it and what's needed to be done, or there's not the power there to supply it?
We have this section of our business we call location analytics or location advisory, which basically is a fancy schmancy way of saying that people's decision making is very complicated, and there are a lot of variables that go into where to site a business or which state to locate a business. It's not always about tax incentives or other sort of cash incentives. It's really about access to 2 or 3 core variables. They're always at the top of a decision. One is power, and the second is people, human capital. And it's our ability to be able to train the workforce of tomorrow that will be working in these advanced facilities. Again, that's the second rate limiting factor of our growth. And here is where we need the technical schools, we need the community colleges, and we need higher education to be able to support that thirst that we have for trained human capital for these roles. So we have a very, yes, we're real estate and we focus on infrastructure, but increasingly we have to focus on our ability to be able to deliver skilled workforce to be able to work in our facilities.
So relevant to our times, right? And for all the investors who are listening, right, when we see these go-go sectors, whether it's data centers, AI, there's a huge technical equipment, but human capital infrastructure that's needed to power it going forward. And it's something we need to think about the momentum, how strong it can ultimately be. Travis, great checking in with you. Travis McCready, he's head of Industries Leasing Advisory and chair of the JLL Global Life Sciences Advisory Board, joining us from Boston on this Tuesday.
Hey, let's switch gears a little bit because President Donald Trump was meeting with his national security team in Washington on Tuesday to discuss the escalating Middle East conflict. This, according to people familiar with the matter. It's fueling fresh speculation that the U.S. is on the verge of joining Israel's attack on Iran. We've got a great voice. We turned him last week. We brought him back. He's Bloomberg Intelligence senior defense analyst Wayne Sanders. He's a former colonel in the U.S. Army. He's got a keen knowledge of intelligence analysis, IT, counterinsurgency, and more. He joins us once again from Maryland. Wayne, good to have you back with us. We knew we'd be counting on you as this escalation continues, as the skirmish continues. Does it stay a skirmish, or do you see escalating beyond Israel and Iran?
Well, it's great to be back. Thank you so much for having me. I think that you are seeing some escalation of that force, right? As we talked about on Friday, what we were doing prior to that was just using words. And now what you've seen President Trump do, he's deployed now the Nimitz carrier strike group into the region, as well as he's now deploying air tankers as well. So what you're seeing is some additional portions of his soft power, if you will. If you're looking at it from an escalation of force, he's saying a lot and doing a lot without having to have direct combat action of any type within the region. But, when you put a carrier group out there, that carrier group has an aircraft carrier with 60 to 75 aircraft on it. You've got that carrier group also has an attack submarine. It has cruisers. It has Arleigh Burke class destroyers, right? I mean, you're talking about quite a bit of firepower that you're at least moving towards that region. And when, as you hear President Trump say, as well as Netanyahu on the Israel side, that they have air superiority over that region. So that becomes a pretty clear statement that the U.S. is going to back Israel in this case.
Does it mean that the U.S. will get involved from the perspective of the B-2 Spirit and the bunker buster that we spoke earlier about?
Yeah, it could be, and I think that's going to be one of the true tales for this. I know on Friday I was more along the lines of, unless they're going to go after, if Iran were to go after U.S. bases, I felt like that was going to be the threshold. However, I know there's a lot of talk right now in terms of those military strike options to figure out what that right escalation of force is, to say, okay, well, if it is what they normally consider valid military targets, which is a lot of what Israel originally was looking at, right? They were looking at the high value individuals within the Iranian Revolutionary Guard Corps, and the Quds Force individuals, regime change type folks, nuclear scientists, as well as the nuclear enrichment facilities like in Natanz, where they have now actually shown that there has been subterranean damage to that based off of satellites. So I think you are starting to see that. I think that if there was going to be an additional escalation with the B-2 Spirit and all that, it would still be looking at those valid military targets.
You know, Wayne, it's interesting you talk about this soft power, you know, deploying the USS Nimitz aircraft carrier strike group. But I also do wonder what you make of what the president did before gathering in the House Situation Room with his advisors, that he posted some things on his social media site. He posted a demand for Iran's unconditional surrender, warned of a possible strike against the country's leader, Ayatollah Ali Khamenei. We also know, he said, we know exactly where the so-called supreme leader is hiding. He is an easy target. He is safe there. We are not going to take him out. Kill, in parentheses, he put, at least for now. And I'm not, like, what kind of power is that? I mean, it's very different, right, for a president to be using social media in this way. But we also know President Trump has used this as an effective tool in some regards. But I'm just curious, as someone is used to probably, you know, understanding the military, things are kept quiet until things are, you know, carried out. I'm just understanding, I want to have an understanding of how you see his use of social media as being helpful, useful, or not.
Yeah, no, absolutely. And so one of the things that the instruments of national power, if you will, right? The Department of Defense, we normally teach in our war colleges about diplomatic, information, military, and economic, right? As instruments of national power on what you're doing. So whether or not it's economic sanctions against somebody, military, as we mentioned about bringing the USS Nimitz in there, diplomatic in terms of using your agents necessary there to be able to try and bring about some diplomatic peace negotiations as well. And then you have the information piece, and that information, this is an area where we haven't seen in the past a lot of use of social media from a president, but it does still fall within what they call information operations, right? It is putting forth your strategic themes and messages necessary to be able to get your point across. And President Trump uses Truth Social a lot of times to be able to do that. He's not wrong in what he says based off of, you know, United States intelligence collection capability and satellites and everything that's at the U.S.'s disposal. You know, finding out where some of these leaders are at any given time, you know, that is something that is definitely within the realm of the possibility. And in his decision not to do something like that, I think he's mainly just trying to say, hey, people have asked this question. There have been pieces out there about it where he has waved off saying, no, we're not going to go after the Ayatollah. And now it's a question of, okay, well, we know where he is. It's almost an escalation in that same information operations part of an instrument of power without using any type of military strikes.
Interesting. Yeah.
Wayne, before we let you go, you mentioned the USS Nimitz carrier strike group that's making its way to that area of the world. That's a sign of soft power. What's another signal that you're going to be looking at over the next 24 hours that will tell you that there is indeed has been escalation here?
So right now, if we look at even, we talked about there are 30 tankers, right? 30 tankers on its way right now over to the Middle East. And that's providing for right now, at that point in time, just that air superiority support. But if you were to look at, if there were additional capabilities that were going across, carrier strike groups are normally used in this capacity a lot of times, right? They bring it over there as that show of force, and then they withdraw and they draw back, right? The U.S. has done that under many presidents over the last 20, 30 years. But if you were to see additional military capability probably show up, right, it would be another sign of that escalation. It could still be in more of a soft military power, right? It could still be delivering more land troops to a specific area that has the ability to reach that. But if you started to deploy U.S. troops into that area beyond what we already have, like onto Israeli soil, you might see some additional.
I don't want to speculate on anything, but I mean, we'll have to see kind of ultimately where this all goes, right? In terms of the U.S. involvement and what that particularly means, whether it's deploying, you know, aircraft carriers or something more.
Yeah, I mean, everything that's been done up till now, right, has been done at calculation based off of risk for the political environment that you're in, the geopolitical area. So you really are looking at it from that is what is going to be too much of an escalation. I talked to you guys about action, reaction, and counteraction. And from that perspective is when you look at that is my action going to cause an unrealistic or unpredictable response back. And that is one of the areas that we look at both in the U.S. From the Department of Defense side, but all the other militaries do that as well. Iran's doing that based off of their calculus as they go after Israel, and then the same thing that Israel is doing based off of how their attacks are affecting the political landscape as well as the decision calculus of those leaders.
Yeah, that totally makes sense. Hey, Wayne, thank you so much again for being available for us to check in as this situation continues to evolve. That is, of course, Wayne Sanders, Bloomberg Intelligence Senior Defense Analyst. Wayne, as we mentioned, a former colonel in the U.S. Army, so really gets to see this from several different perspectives, I guess I should say. All right, folks, we've got about 18, 19 minutes to go until we wrap up the trading day.
Yeah, let's go to Charlie Pellet, who's got an update on how things are looking. Hey there, Charlie.
All right, thank you very much indeed. Stocks lower across the board. The Dow, the S&P, NASDAQ, very close to session lows. But let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are under pressure on Middle East worries. The Dow is currently down 320 points. S&P's dropped 50, and NASDAQ is lower by 0.8%. The U.S. 10-year is at 4.39. Gold is little changed. Oil is surging, but Bitcoin, that's lower by 3.7%. Among the main 11 S&P sectors, only energy was in the green. Healthcare and consumer discretionary were under pressure. And leaders to the upside in the Dow, Chevron and Visa, while Nike fell 3% and led to the downside. After earnings, Jabil jumped as much as 13%. And in deal news, Eli Lilly is buying a biotech Verve for $1.3 billion. In the pharma space, the administration is set to consider a crackdown on pharma ads. And wrapping things up, CrowdStrike jumped 3% to a new all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over at your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a twin.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
The funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody, about 16 and a half minutes to go until we wrap up the trade on this Tuesday, June 17th. Charlie and Bill Maloney just wrapping over the trade today. We're off our lows of the session, but definitely a risk-off trade. This caught my attention, Tim. B of A, Bank of America clients, took a defensive stance on U.S. stocks for the first time in 6 weeks with net buying of defensive sectors and selling of cyclicals last week.
I mean, given how close we are to all-time highs,
I know, right?
maybe they're saying enough is enough. Is that what it is?
I don't know. It's like, doing well, lost a lot, came back. I'm out. I'm out.
Maybe.
I'm done with 2025.
Let's see what our Drive to the Close guest has to say about this. Back with us is Larry Pitkowski, co-founder and managing partner and portfolio manager at Good Haven Capital Management. He joins us from New Jersey. What do you make of that, a more defensive position for the first time in the last 6 weeks, net buying of defensive sectors and selling of cyclicals? What do you make of that, Larry?
Well, I make of it, first of all, hello, Carol, hello, Tim. I make of it that there's obviously some more fear and uncertainty in the air than there may have been recently. And, that's, it's perfectly understandable. You have a lot of different dramatic things going on out there, fiscally, geopolitically. And all we will try and do here at Good Haven is, try and use that to our advantage if we can for our fellow shareholders and looking for opportunities that the market may have gotten wrong over the short term.
All right. You sound pretty sober. Is it like, how do you see the environment right now?
Carol, I try and maintain kind of a relatively even disposition through it all. It seems to have served.
I'm sure
us
your
well
clients
over
appreciate that. I'm sure they appreciate that. But
it is who I am. So hopefully they do, because I just don't have a different channel to any great extent. Look, I pride myself on not thinking that I have the answer to every complex geopolitical or fiscal thing going on. Off camera and off hours, I'll give you my favorite list of 15 people who think they do have the answer to absolutely everything that goes on. But that's for another day. I don't think I have the answer to everything. So I'll try and stick to really trying to understand the 15 to 25 things that we own, think about what's going on out there and how they may or may not be impacted, and then go back to doing the deep research that I think has served us well.
All right, so let's talk about those 15 to 20. Is there anything that has changed in that list coming off of President Trump's second term so far?
Well, obviously the current policy regarding tariffs is, a more dramatic escalation of what some of those game plans may have been thought to be. And there are some industries that are very impacted, some not impacted. And of course, my view on whether it's the right way to try and improve trade imbalances and whatnot is not really that important, even though I don't think it's really a great way to do it. So I'm happy to say that I don't think we are a deer in the headlights or we have anything that is proven to be problematic, though lots of industries are somewhat impacted, and we try and buy things with a margin of safety so that even if things go imperfectly, the outcome can still be a good one. So we have not made any drastic changes, and I think approaching all investing with that margin of safety mindset should serve one well when you do get more dramatic things happening than you might have guessed would happen.
All right, so do you want to share a name?
Well, we do have an interesting name that happens to be in the energy space that I did want to mention. And it's not I think oil is going up because of some of the things going on in the Middle East, but it is an interesting company. And I actually thought I would mention it when I, knew I was coming on recently, even before the current events. So we own a company called Vitesse. Okay, symbol is VTS on the New York Stock Exchange. It's a less than $1 billion market cap. And it's a very interesting company. They have a very complicated modus operandi, which is on their website, which says, we strive to generate strong returns for our owners by owning a fractional interest, primarily as a non-operator in large in oil and gas fields, drilled by the bigger companies.
Yeah.
So, you've got a 9.5% dividend yield. You have a management team that was operating the company when it was a subsidiary of Jefferies. And before that, Leucadia. They're proven people, Bob Garrity, Brian Cree. Their whole modus operandi is to generate strong returns. And it's a way below the radar screen type of company. It is not a bet on oil. And in fact, when it got spun out of Jefferies, the first thing we spent a lot of time thinking about here at Goodhaven was, how would it do if oil was lower and stayed lower? I'm a worrier first. And after satisfying ourselves with that, we became convinced that the forward path was an interesting one.
Interesting. It's about a $911.7 million market cap, so it's a small one. It is up, it is down about 5.5% year to date. But as you mentioned, that dividend, pretty impressive, 9.5% dividend yield. I mean, are you buying it largely because of the dividend? Just 20 seconds here.
Well, their focus is the dividend. So we're buying it for the total return over time, but the dividend and increasing it, which they just did, is their focus. And the people are special.
Okay, good stuff. Hey, Larry, thank you so much. Larry Pitkowski, Managing Partner and Portfolio Manager at Goodhaven Capital Management, joining us from Millburn, New Jersey. All right, folks, coming up on 10 minutes to go in the trading session, and we are just off our worst levels. Tim, we're down 0.7% on the S&P 500, NASDAQ 100, a decline of 0.8%.
Hey, still up 1.8% year to date.
Glass half
I'm
full.
not a full guy. Come on.
That's you. Kind of love that. This is Bloomberg.
You're listening to Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, under 7 minutes to go until we wrap up trading on this. I know. It's...
Wow.
I don't know whether I'm just kind of waiting for something. I just feel like there's a lot going on. We do know the president has wrapped up his meeting in the Situation Room with his advisors. We got that, CNN reporting that out. So we'll wait to see if there's anything that comes out on that. In the meantime, stocks are definitely off their worst.
My eyes are glued to Truth Social. Fortunately, in my terminal, I get the Truth Social posts.
Yeah, I know we all do, right?
I guess. Do we all get them?
Do we? I don't know.
I get them.
Wait.
So that's how I know what he says on Truth
them?
Social. They just get emailed to me. I don't know how I get them.
How do you do that?
They're news alerts, I think. I think they turn into news alerts.
You know, we have actually a function.
Oh, maybe I'm signed up for it and I don't even know
Maybe
it.
that's what you're doing. You're getting alerts off of that.
TST, right?
You know, this is what's kind of cool about the Bloomberg. I know we're digressing and there's a lot of stuff going on, but it's like just so much here. We learn every day.
Yeah, I'm looking for it.
Yeah.
Hey, there's a New York story that people outside of New York are texting to me.
Yeah, this is a big one. We were talking about this in the
newsroom. It hit the
newsroom.
family chat.
Did it really?
Yeah. My family, even though I'm the only one who lives in New York, they're very interested in the mayoral election.
Are they like,
here.
did you see this?
Yeah, and I had heard it.
Yeah.
But they were pretty quick to it. I have a very online brother who has a real job.
But he's online.
But he's online a lot.
Man, he's like us.
He's like us. That's what I say to him. I said, you should be working in a newsroom.
Come on over. Let's get to it. New York City Comptroller Brad Lander was arrested outside of Immigration Court in Lower Manhattan. He is running in next week's Democratic primary for mayor. He was detained by ICE, U.S. Immigration and Customs Enforcement agents. That was today, according to his campaign. He was arrested for assaulting a law enforcement officer. That, again, was a spokeswoman from the Department of Homeland Security pointing that out.
If you're watching us on YouTube or Bloomberg Originals, you can see it. You can see footage of it on the screen. He's the comptroller and a mayoral candidate. He was just escorting a defendant out of court, his campaign said. Lander was there to observe immigration hearings and hold a media event to promote more legal funding to support immigrants. This is according to his public schedule.
Yeah, he allegedly locked arms with an undocumented immigrant in an apparent effort to shield the person from detention, according to a federal official. I don't know that we saw that on the video. I think we saw the officials going around him specifically. So I don't know that we saw that. When agents moved in to arrest the individual, Lander allegedly refused to release his grip and pushed away the officer's hands. The alleged interference is what prompted the arrest, according to the official, who asked not to be identified, speaking on the matter. Lander is expected to be issued a criminal summons and released.
The arrest comes less than a week after U.S. Senator Alex Padilla of California was forcibly removed from a press conference and handcuffed after disrupting a media briefing by Homeland Security Secretary Kristi Noem in Los Angeles.
And we know that this has been happening. ICE agents, showing up at courthouses across the country to basically detain migrants after their cases are dismissed. The arrests have raised concerns among attorneys about due process, right? Immigration courts are overseen by the Justice Department and not the independent judiciary. So that is a good point and something that is certainly being discussed by a lot of folks in the legal world about due process, right? Having your day in court. But I don't know, are you really getting due process if you're at risk potentially of being arrested as soon as you come out of court? And so will people maybe stay away from the courts? I don't know. There's a lot of questions here.
A spokeswoman for the Department of Homeland Security that said that ICE officers are facing a 413% increase in assaults. She also said that it's wrong that politicians seeking higher office undermine law enforcement safety to get a viral moment. Though we should note that the comptroller said that arresting Comptroller Lander for the simple act of standing up for immigrants and their civil rights is a shocking abuse of power. This is according to Attorney General Letitia James, who called the arrest, quote, profoundly unacceptable.
All right, folks, we're going to head over to our TV colleagues in just a moment. We are seeing trading. We're just bouncing off our lows of the session, but we're going to count you down to the close on this Tuesday. Some of the top things in mind, and we're going to get into some of the winners and losers. Do not go anywhere. Over to our TV side. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell. It's a global simulcast with Scarlett Fu here in the TV studio. Carol Massar and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Carol, we came into today with a close eye on a lot of economic data, but all eyes really shifted to the situation in the Middle East with the President of the United States just wrapping up a meeting in Washington with his national security advisors.
That's right, and the trade remained telling us so much. If you look at the major industry groups in the S&P 500, the only one outperforming is energy names. They're up about 1.5%, and that we've seen riding the back of another spike in WTI crude. So once again, that really is because we're so focused on what's going on in the Middle East.
Yeah, we just had a great conversation with Bloomberg Intelligence senior defense analyst Wayne Sanders. He's a former colonel in the U.S. Army. He pointed our attention to the USS Nimitz Carrier Strike Group that's making its way there, and also gave us some ideas of what to watch for when it came to escalation. The big question that I think a lot of people have is, what does U.S. involvement look like in a war between Israel and Iran?
Right. It's an unanswerable question right now. So in the meantime, you just see the indexes lose a lot of momentum. You also see bonds come in as a safe haven play once again. Yields are actually down for the first time in 3 days.
Right, and you have the move into the dollar as well, which really dovetails with Bank of America Fund Manager survey saying that that the dollar is most under-owned in, 20 years, and yet we're seeing a bid into that asset class today as a safe haven bid continues.
Interesting to see the dollar get bid. Of course, also seeing some of those other safe haven FX assets get bid up as well, including the Swiss franc here on this Tuesday afternoon as we get the closing bells right across the screen for all of the major indices. The Dow Jones Industrial Average lower by 300 points, or about 0.7%. The S&P 500 closing below that 6,000 level, 5,982 and change, down 50 points, or 0.8%. The Nasdaq Composite down about 0.9%. A similar move for the Nasdaq 100, and the Russell 2000 lower by 22 points, or 1% even.
All right, that's a look at the overall trade. Back to the S&P 500 I go, and very clear a sign of risk-off trade. The S&P 500, 414 names to the downside, Scarlett, 88 to the upside.
All right, and the IMAP is pretty straightforward as well. 11 groups in the S&P 500. The only group higher is energy, up more than 1%, and that's actually mirrored in what we see in the Russell 2000 as well. All the industry groups lower except for energy.
All right, guys, let's get to some of the individual movers. Let's start with the gainers. Jabil Circuit, that is the #1 gainer in the S&P 500. Shares jumping to a record in today's session after the manufacturing services company reported third quarter results that beat expectations. The company also raising its full year forecast. That stock up just shy of 13% at its highs today, finishing the day with a gain of 8.9% on a tear, I should point out, this year overall. It's up about 40% here in 2025. Another outperformer, Fluence Energy, ticker is FLNC. It's about a $1 billion market cap, energy storage products and services and digital applications for renewables and storage company. That's a mouthful. Stock at its high, up about 19%, settling in, though, at the close with a gain of about 13%. The Senate Finance Committee coming out, releasing its version of a budget reconciliation bill that JP Morgan analysts believe is positive for energy storage firms, not for another group of the energy world. I think Tim might touch on that in just a moment. But this stock, I should point out, even with that 13% gain today, is down more than 60% year to date, with about 40% of the float shorted. So some negative sentiment out there, maybe some short covering in today's session. One more name for you, certainly an outperformer, Verve Therapeutics, up almost 82% here at the close. Eli Lilly, of course, agreeing to buy this gene editing startup for about $1.3 billion. They're going to pay as much as about $13.50 a share, the company said today. That was a more than 115% premium to the closing price of Verve yesterday. And I got to say, crazy thing is, the move not to its highest level ever for shares of Verve. It was once a $73 a share stock back in 2021. Wow. Today closing under $12 a share. So I just thought a little perspective there.
Okay, you got the gainers, Carol. I got the decliners. I want to start with shares of T-Mobile falling 4% today. The company shares fell after we learned that SoftBank sold around $4.8 billion of stock. The move helps fund the Japanese company's plans for AI. They sold 21.5 million T-Mobile shares for $224 each. It priced at the bottom of a $224 to $228 range. So certainly some selling pressure on T-Mobile today. Also, solar stocks under pressure today. This is the Invesco Solar ETF, ticker TAN, down 9%. But that kind of masks some of the big moves that the companies within this ETF made. I mean, we're talking about companies such as Sunrun down 40% in a single day. SolarEdge Technologies down 33% today. Enphase Energy down 24%. First Solar down 18%. These U.S. solar companies fell after Senate Republicans released a bill that would end clean energy tax credits earlier than expected. It dashed hopes that major cuts passed by the House wouldn't stick. I did look up on the screen and saw you were speaking to an analyst about this exact thing a little earlier in the program.
Yeah, so he was
optimistic, pessimistic. What did he say?
I mean, he said it was worse. I mean, the House bill was worse than the Senate bill.
Okay.
And that there are other things that could continue to boost residential solar, but that market will be smaller and that growth will be smaller. Now, utilities in solar is very different. They still get the tax credits. They sign those purchase power agreements. It's that residential solar, and that's why Enphase is getting hit so hard. That's the problem.
Yeah, just a brutal day for some of these stocks. Finally, JetBlue having a terrible day as well. Shares fell close to 8%. The company said it plans to hasten cost cuts by eliminating some flights. It plans to end service to a number of cities and restructure its leadership ranks as economic uncertainty feeds weaker than expected demand for travel. I have a lot of questions about where this company is going to be going. We're going to speak to Mary Schlangenstein in just a few minutes on our program about the outlook for JetBlue.
Yeah, I think they're also probably a little concerned about that as well. So where do you go in an environment like this? You go to the bond market, particularly the long end. You're seeing yields come in by about 5-6 basis points. Even the 2-year is down by about 2 basis points. There was also a tweet from Nick Timrose of the Wall Street Journal, of course, that sort of avenue being the Fed whisperer, in essence, saying that the Fed board announces an open meeting to discuss a proposed revision to the supplementary leverage ratio standards at 2 p.m. next Wednesday. So if the SLR, is rolled back in any form, that could mean potential more buying and holding from banks because they don't have to count that against their leverage and their pot of cash, basically. So that could be good for the Treasury market.
Absolutely, and of course, just a reminder that Fed meeting, that normal Fed FOMC policy meeting, kicked off today. Of course, they will make their Fed decision tomorrow. Full coverage of that, but more importantly, of course, the press conference obviously going to be peppered with a lot of questions about the potential inflationary impact of this rise in oil and the conflict in the Middle East. The latest headlines that we know right now, at least out of the White House, is that meeting between Donald Trump and his national security advisors has wrapped up. We're still awaiting for some sort of communication as to what was discussed, guys, and more importantly, as to what might happen next.
And the reporting ahead of the meeting was that President Trump was seriously considering joining the war. This comes from Axios, among other reports. And of course, in his social media posts, as well as his comments to reporters as well, you definitely got a sense that there was more action on his mind in terms of entering, even though as a candidate, he campaigned heavily on not involving the U.S. in overseas conflicts.
Yeah, and keep in mind, in talking to various members of our team, including Tony Capaccio and Wayne Sanders, I mean, this idea that there is still a big presence already of the United States in the Middle East. I think he said something like 40,000 in total. And right now, what we've seen in terms of what they called the soft power that President Trump has already sent over to the region. He talked about the USS Nimitz aircraft carrier strike group, and you're talking about an aircraft carrier. You're talking about a submarine. You're talking about quite a bit of firepower already. So if you're wondering what, is the U.S. already involved, I think it's safe to say to some extent, yeah, it really already is.
Also, add on 30 aerial refueling tankers that have made their way toward that area of the world. Alex, I think a big question a lot of people have is about what happens to the U.S.'s bunker-busting bombs. This is allegedly and it's very secretive. We talked to Tony Capaccio about it. Allegedly, the only bomb that could bust a certain enrichment facility in Iran, but only the U.S. has it, and only the U.S. has the capability to deliver it with the B-2 Spirit. And that would obviously mark a huge escalation of the conflict and U.S. involvement, considering that the U.S. is the only country in the world that has those resources.
And by deliver it, you mean actually drop it.
Yes,
so it's
the
not like
B-2
it can
Spirit.
pass it off to Israel and say, here
exactly.
you go. have some good luck there. And we were talking to retired General Wesley Clark, and he was saying, look, you got to really focus on the end game, not just the ways and the means, and unclear as to whether or not all those three scenarios were being laid out in the Situation Room.
And that really is, I think, what a lot of people want to hear about. It's not just necessarily the next strike, but sort of what regime change would look like if that is indeed the end goal, and more importantly, who's going to oversee that?
In the meantime, we should remember that we've got a lot of colleagues that are out there in the region. And I know, Alex, we heard some of your conversation on Bloomberg Intelligence earlier with Ethan Bronner, who was on air with you guys as there were attacks happening around him in Tel Aviv. So we're thinking about everybody who is in the region more broadly, and certainly our colleagues who are there in Israel as well. All right, guys, that is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. I know Alex is heading out. Scarlett and Romaine, of course, continuing on the closing bell, and Tim and I continuing on Bloomberg Business Week Daily. Folks, we'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, you are back here on Bloomberg Business Week Daily. Carol Masser, Tim Stenivek, live in our Bloomberg Interactive Broker Studios. You just heard from our TV colleagues, and we've been reminding you that according to reports, CNN, and I think we may have, I'm not sure if we've matched it, but it does look like the meeting that the president has been holding in the Situation Room with his advisors, it has ended. So we are monitoring to see if we get any update out of that meeting, specifically when it comes to the U.S. stance on the Israel-Iran hostilities that we are continuing to see. So we're monitoring that for you.
I'm going to go right to our story. Kayla
Sure.
Gardner, Josh Wingrove, Stephanie Lai, and Arsalan Shahala writing that President Trump met with his national security team in Washington on Tuesday to discuss the escalating Middle East conflict. This, according to people familiar with the matter. It fuels fresh speculation that the U.S. is on the verge of joining Israel's attack on Iran. The meeting lasted over an hour, and the White House provided no immediate statement afterward. Before gathering his advisors in the Situation Room, President Trump posted a demand for Iran's, quote, unconditional surrender, and warned of a possible strike against the country's leader, the Ayatollah. Here's what he said, quote, we know exactly what the so-called supreme leader is hiding. You know exactly where the so-called supreme leader is hiding. He is an easy target, but is safe there. We are not going to take him out. In parentheses, he wrote, kill, at least not for now, end quote. This according to a post the president made on Truth Social.
Right, and he did that before the meeting with his advisors in the Situation Room. So again, of course, keeping our eye on that. In the meantime, one of the names we just talked about with our TV colleagues, I think, Tim, this was one of your highlights.
Oh, yeah. This is
when
my
it
last
comes to
decliner.
decliners. JetBlue down around 8%, just shy of 8% here in today's session. The company said it plans to hasten cost cuts by eliminating some flights, ending service to a number of cities, and restructuring its leadership ranks as economic uncertainty feeds weaker than expected demand for travel. I don't think I'm talking out of turn. You and I came back on a red eye on JetBlue. It was in Mint. And it's kind of,
wow, Carol Masser, you're fancy.
Well, I remember when they introduced it, it was a big deal in their business class or first class. And it's really nice for if you're going across the country. Having said that, mine had a piece missing on the side and it was taped. And it just reminded me, and I want to bring in our Mary Schlangenstein, who's Bloomberg News USA Airlines reporter. She's out there in her Dallas bureau. Mary, it reminded me, I remember when all of JetBlue planes were spanking new. And it was interesting. Yeah, it was really cool, and the endless snacks, even if you weren't in business or but it was just interesting for me to be sitting in that plane, and there was a piece missing, and then they had taped over another part, and I thought, wow, times have changed. They've got more legacy issues than they did certainly when they started, but give us some context on kind of where JetBlue is when it comes to all the major carriers that are out there.
Well, because JetBlue is primarily focused on the U.S. market, it's suffering just like a lot of other carriers are from a downturn in demand in the U.S. And this really started earlier in the year and was a big surprise to airlines that had expected a really profitable and strong demand year in 2025. But when Trump imposed the tariffs and people became very worried about a recession, about inflation, about trade wars, then domestic demand really fell off a cliff. And that was in April. A lot of the carriers came out and they withdrew their full year guidance because things were so uncertain. And so basically what JetBlue is saying is this hasn't gotten any better for us, and we're going to have to take more steps to cut costs.
Hey, question that I have about this, Mary, is really when it comes to what is unique about JetBlue and why it's struggling so much. Yes, there have been a couple failed tie-ups. The Spirit thing didn't work out. The American Airlines thing didn't work out. It's trying to do something with United that's going to be over the next few years. What is is the challenge to Mint that it's not an ultra low-cost carrier, but it's also not one of the big three? Is that the problem?
That's part of the problem. It's not. It's also not a full-service global airline, although it has some international routes. But it's kind of stuck in the middle. It's really a niche player, and that's what it was trying to get away from when it tried to acquire Spirit and did the alliance deal with American. It really needed more heft to compete with the bigger players in the U.S. industry. And of course, it didn't get that. And so Joanna Garrity's been trying to restructure the operations at JetBlue. She's pulled them back to their original focus areas of the U.S. Northeast and along the East Coast. And the situation in terms of demand has just really been tough in those areas.
All right. So I don't know. What are you hearing? What's the outlook? I mean, how much time do you give? I mean, listen.
They're running on borrowed money right now. Well, that's the how long do they have?
No, right. I mean, when companies are going through changes, you give them a little bit of time. But Tim makes a really good point. You got to look at the balance sheet and wonder what kind of pressures they have right now.
Yeah, and it really hasn't been that long since Joanna Garrity took over. Mm-hmm. But, they do have this United plan, doing the partnership with United, which they expect to really help them a lot. It's going to give United access to some routes at JFK, going to give JetBlue access to some slots at Newark. And so they expect a lot out of that. They're also partnering on their travel bookings venture that JetBlue has, which should bring a lot of added revenue into JetBlue. But you have to remember that, their executives spend a lot of time focusing on these failed deals, and they're really having to go back and focus on basic operations at JetBlue, and it's just a tough time to have to do that.
I'm so glad you went there, though, with United, because United was down 6.2% today as well. Is it because of the JetBlue news, and there's some kind of read into, all right, if JetBlue's having issues, does that mean United is too? Help me tie that up.
No, I think really, if you look, all the airlines are down today, and all the airlines are down by a pretty good amount. And so I think it's probably broader market forces at work here, things that are affecting a lot of variation of stocks and not just the airlines.
Okay, so obviously a lot of headwinds facing the entire industry.
Totally.
Moving forward, it sort of builds on what Carol was asking about when it comes to the future of this company. Is this, I'm not going to ask you to make predictions because that's not the business that we're in, but is this a company that analysts say can succeed in its current iteration, or is it going to have to become part of something else?
No, I don't think anybody's predicting or forecasting that they're going to have to become part of something else. Merger and acquisition talk in the airline industry is non-ending. It's always going on. But I haven't seen really anybody focusing on the fact that JetBlue needs to get a deal done as soon as possible. Again, I think the alliance with United is seen as a big feather in their cap and something that is going to pay off for them.
All right, going to leave it there. Hey, Mary, thank you as always. We should point out shares of JetBlue are down about 46% year to date. So we've definitely seen a ton of pressure.
I just want to say, we got such a great team who covers airlines here.
I know.
Not just from a Bloomberg News perspective. You want to talk, Boeing.
Right.
We got a great team on Boeing. You want to talk about individual airlines? We got a great team doing individual airlines. Those are the Bloomberg News reporters. We also got the Bloomberg Intelligence folks, like George Ferguson, for example.
No, and it gets into the details. I think, things get lumped into one group, but each carrier is different, right?
Read Julie Johnson on Boeing. Read Mary Schlangenstein on the airlines.
Totally. And we should point out, Mary, of course, is Bloomberg News U.S. Airlines reporter joining us from our Dallas bureau. So check her out on the Bloomberg and at Bloomberg.com. But she's right. You and I were talking talking about this in the newsroom. We were looking at kind of all the airlines, and if I pull up the super composite, it was down. I think it was I think there were 9 names in it, and I think they were all down on the day. And the index overall, the S&P 500, 1,500 passenger airlines composite index was down 4.3% today. So we saw a ton of pressure.
Everything's
on the group
lower.
overall. Yeah, but this was definitely underperformance.
Oh, yeah, as far as
in terms of
go.
airlines, yeah.
I was choosing between that for my decliners and like going with all the solar stocks because
Well, you like those were 2 groups that really got beaten up today.
welcome to a day where finally decliners are easy. Yesterday was pretty tough, Carol.
I know, right?
Yeah.
Yeah.
But you
I had
know
a lot
what?
of
Stocks
gainers
go up,
yesterday.
stocks go down. That's what makes a market.
Well said, well said.
Thank you.
Carol Master, Tim Stanovic, you are listening and watching Bloomberg Business Week Daily.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. A down Tuesday with the Dow, the S&P, NASDAQ all declining. Wall Street's concerns over escalating Middle East tensions and weak economic data led to a slide in stocks. All of this ahead of a Fed decision tomorrow. Yes, we'll break it for you. 2 p.m. Wall Street time. The news conference 2:30 live on Bloomberg Radio. S&P today tumbled 50 points, closing below 6,059.82, down by about 0.8%. Dow Industrials down 299, drop there of 0.7%. Nasdaq down 180, a decline of 0.9%. 10-year 4.38% with a 2-year 3.94%. Gold flat on the day, 33.84 the ounce. West Texas Intermediate crude oil surged 4.3%, 74.83 a barrel on heightened Middle East tensions. And Bitcoin today, we did see Bitcoin slump 4%, 104,483 on Bitcoin. On a down day for stocks, most defense stocks did advance, including 3 names associated with the manufacture of those so-called bunker buster bombs. Shares of Boeing down 0.7%, Northrop Grumman up 1.3%, RTX Corp up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. We are all in on the Fed today, although it may not seem like it because of the conflict overseas.
It's kind of amazing, right?
Any other day,
yeah,
where we'd be on the Tuesday, the first day of a 2-day policy meeting, we'd spend quite a bit of time talking about the Fed.
Or we would talk about the market kind of marking time because it's just waiting for that Fed decision, but that's not necessarily been the trade today.
One person we go to regularly for his view on the economy and rates around Fed decisions is Frank Sorrentino. He's chairman and CEO at the publicly held New Jersey-based community bank Connect One Bank Corp. It's the parent of Connect One Bank. We're talking small businesses, construction companies among its customers. The bank recently merged with First Long Island Corp., which brings its total assets, Carol, to about $14 billion.
All right, Frank is back with us, and he is in Melville, Long Island. Frank, good to have you here. We always appreciate getting some time to check in with you and see what you're seeing. It's all fast and furious.
Carol and Tim.
It's good to have you. Would you like to just take a long nap and wake up in, I don't know, 2026 or 2027? Tell us about your world right now and what you're seeing, because you've tended to be pretty optimistic.
Yeah, it's interesting. You know, if you go back a couple of months to Liberation Day and you took a nap on that day and woke up today, you'd say, well, I don't know, things don't look too bad other than what's going on overseas. The market has pretty much rebounded or recovered most of the ground. You know, people feel the economy is on more sturdy ground today than they thought in those weeks after that news. But the economy still is quite robust in the markets that we serve. As you know, Connect One is in the New York metro market, in New Jersey, New York, now Long Island, in a pretty big way. And the vast majority of the client base that we have is still seeing strong demand for products and services, a lot of service-oriented businesses. There's still an enormous amount of demand for housing, for apartments, for all types of construction, warehousing. Even office, which has, as you know, been, the subject of, a lot of conversation over the last two or 3 years or so, is seeing a tremendous rebound as we're moving, through this period of time.
I'm getting a few questions from a loyal listener, Ryan Horan, reaching out over the Instant Bloomberg. He's glad we're talking to you because it's a great check of small business and the consumer. He's curious about any worrying trends or any pullback in underwriting that you're seeing. Are you adding to reserves to shield any non-performing loans?
Most banks are reporting that they're seeing a fairly benign credit perspective out there. I know there was a lot of tariff talk 60 days or so ago, and a lot of investors were very concerned about how tariffs may impact bank earnings, through the credit cycle, through any sort of credit cycle. That's really quite diminished recently in the past few days or weeks. And banks are still reporting a fairly benign credit period. There are certainly one-offs, as we would always expect there to be, and there's appropriate reserving going on at most banks. But there's nothing systematic that's out there that where banks are feeling that there are particular segments of the market that are showing more signs of weakness than normal.
Why is that? Not to be negative, but I'm just curious. Why do you think things are holding up?
I always start with, we have a 4% unemployment rate. Yeah. Everyone has a job, and anyone who's looking for a job can get a job. And so things are good. People are getting raises. There's, plenty of opportunity in the market. There's been an enormous amount of liquidity put in the market over the last dozen years or so that is just driving our economy to all-time highs. The market is reacting to that. You can't buy a car. People are waiting in line for homes and apartments. Luxury goods are on fire. You go to the airport, you can't get on a plane. It's the economy. I keep saying the economy is robust, and everyone keeps challenging me why I use that word. Well, it just is. And so all of these things are driving. GDP is growing at over 3.5%. That's what's driving what's going on, notwithstanding all the news that you're hearing about, a lot of global issues and other, political, craziness that's going on in the marketplace.
But what do you make, we talked the retail sector earlier with Dana Telsey, and we talked about everyone trading down. So you're seeing discount retail doing better than most. Airlines pulling guidance. It feels like there's stuff brewing. And I think it's safe to say that employers are really gun shy about letting go of workers. There is some labor hoarding going on because they remember all too well, Frank, what happened after COVID and nobody could find workers, right? So I just wonder if you've seen a lot of economies. I know I ask you this all the time, but I just do wonder, are you hearing anything anecdotally where people are like, yeah, we're a little nervous, and if these tariffs are more onerous?
We are.
Yeah.
Yeah, I think we are seeing consumers being a bit more price sensitive. And I think they are, maybe not spending as lavishly as they might have in the past. And they got a little shook up with the tariffs, and they're looking at some specific products that, may have changed in price. There's been some hoarding going on that I do think impacted some of that consumer spending. I know for a fact that's impacted, building supplies and building goods. People front loaded buying things in anticipation of the tariffs. So there's a lot of turbulence going on in the marketplace today. My read, however, is though, if you strip out, some of the, gas and tariff related items out of the consumer spending, you'll actually see numbers were actually up a bit, not down. And even what they're reporting that the consumer spending was down a bit, it's down less than 1% or point something percent. So it's not a sea change that's going on. There is some volatility here, but overall, I still see. I do not see a recession, and I still see a fairly robust economy ahead.
We're talking to you on Tuesday, June 17th, the day before we hear from Fed Chair Jay Powell. We don't know what he's going to say. I think I know what he's going to say to when he answers some questions, specifically about politics and his own future, because he said those same answers for months. But Frank, I'm curious what you see as the path of the Federal Reserve for the remainder of the year. Give us your dot plot.
Well, based on what I just said to you, if that in fact is what's going on in the economy, then the expectation has to be that the Fed does not lower rates because the economy is still quite strong. And so my belief would be that you'll see you will definitely see some commentary about the uncertainty that lies in the marketplace as we move forward. There are lots of things to be uncertain about, tariffs being one, the war in the Middle East, the war in Ukraine, and how those things are impacting, gasoline prices, which happen to be down, but could rise dramatically depending on where things go. So there's going to be a lot of things that are inputs that the Fed will be looking at that will determine what's going to happen in the future, and they may give some guidance about what they think those things would be going forward. The market expects the Fed to cut at least one, if not two times this year. I believe it'll be closer to one, and be careful what you wish for. I do believe that, again, this economy will continue to roll on, and the Fed is going to have a tough time to lower interest rates as we move through this cycle.
Frank, I do wonder, too, this was an interesting past earnings cycle where we actually did have folks give you two scenarios, like if everything's good, here's what our numbers will be. If they're not, here's where they will be, and quite a range. And I'm not saying everybody did that, but it was just for those of us who have covered publicly held companies for a long time and the earnings season. I don't remember people doing that. I've seen people pulling guidance a lot, but not giving scenarios. I'm curious about the conversations you have with your team. Do you talk about a lot of different scenarios in this environment because it could go a lot of different ways, or no, you feel much more confident to say, this is probably the course and here's why we can make decisions based on this course?
We definitely have those discussions. We're definitely keeping our ear close to what's happening. And the thing that I constantly bring back to the table is let's listen to what our clients are telling us. And so, it's one thing for us to predict what we think is going to happen based on facts, figures, whatever, but hearing in from our clients and what they're experiencing in each of the various segments that we do business with, to me, is much more important than any view we may have on our own. So we're still hearing that folks in general are in good shape. There's a fair amount of liquidity still in, folks' checking accounts, and their ability to borrow still remains strong. And so we continue to see a fairly robust economy going forward, and that's what we're modeling for, and that's what we're predicting for the future.
Some people say uncertainty. Frank's word is robust. That's the word he uses, and he's used over and over again in interviews with us.
You've been consistent, and
uncertainty is a challenge, though, and it is impacting people's decision-making ability. And so, one of the things that I always look at and always counsel people is, hey, look at what's really going on the ground,
right?
And try not to get caught up in all the headlines of what may be going on around you that doesn't necessarily impact you. I've had conversations with clients who are talking to me about tariffs, and tariffs don't actually impact their business.
Right.
So I'm saying, well, okay, why are we focused on that? So uncertainty absolutely can change the direction of the economy.
Yep, sentiment can be pretty strong, right? And uncertainty certainly plays into something like that. Hey, Frank, as always, thank you. Frank Sorrentino, Chairman and CEO at the publicly held New Jersey-based community bank Connect One Bancorp. As we said, and like to remind you, it is the parent company of Connect One Bank. Just quickly, we want to mention something we've gotten from the New York Times.
Yeah, this is just crossing in the last 20 minutes or so. Iran is preparing missiles for a possible retaliatory strikes on U.S. bases. This, according to officials. The New York Times reporting that American commanders have put troops on high alert throughout the region as fears of a wider war grow.
Yeah, I'm just going to quickly pull up what I'm seeing in S&P 500 E-mini futures to see if we're seeing any kind of reaction. We're down about 0.8%. So we're seeing a little bit of a lower movement in the after hours, but we'll keep a watch on that. Folks, you are listening and watching Bloomberg Business Week Daily. This is Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. A down Tuesday, Wall Street's concerns over escalating Mideast tensions and weak economic data led to a slide in stocks, with the S&P 500 index lower today by 0.8%, down 50, but closing below 6,000 at 59.82. The Dow down 299, a drop of 0.7%. Nasdaq down 180, a decline there of 0.9%. The 10-year 4.38%, with the 2-year 3.94%. Gold little changed on the day, up $1 the ounce, 33.86, and West Texas Intermediate crude advancing today by 4.5%. Now it's 75.02 a barrel. All of this ahead of a Fed decision and news conference tomorrow. What to expect? Frank Sorrentino is founder and CEO of Connect One Bank, and he was a guest right here on Bloomberg Business Week Daily.
My belief would be that you'll see you will definitely see some commentary about the uncertainty that lies in the marketplace as we move forward. There are lots of things to be uncertain about. Tariffs being one, the war in the Middle East, the war in Ukraine, and how those things are impacting, gasoline prices, which happen to be down, but, could rise dramatically depending on where things go.
Frank Sorrentino of Connect One Bank interviewed right here on Bloomberg Business Week Daily. Recapping a rally in crude today, up 4.6%. S&P down 50, down 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Really do appreciate it. Lots of news in healthcare today, Carol. We saw shares of ad agencies and marketing service companies like Publicis, WPP, Interpublic, and Omnicom fall. This was earlier today after Bloomberg reported that the Trump administration is discussing policies that would make it harder and more expensive for pharmaceutical companies to advertise directly to patients. So it's the stuff that you see on TV, it's the stuff you hear about on radio, where you hear the side effects discussed.
It's why, hey doc, so-and-so just advertised that this is going to solve all that ails me. Can you give me some? Basically, that's right. Like, you see
exactly
something.
why we wanted to talk to Damien Gardet. He's Bloomberg News healthcare reporter, Bloomberg News health reporter. He joins us here in the Bloomberg Interactive Brokers studio. There's a lot here. There's also a story about Eli Lilly buying Verve Therapeutics. We're going to get to that with you if we have time. First, though, this is a $10 billion in annual ad spending. What is the purpose of showing us, the general public, ads for niche pharmaceutical drugs that our doctors already have on their radar? I've never understood this.
It is fascinating. And when you probe into that, I feel like these things come in tiers. So there are medicines like Skyrizi, drugs for psoriatic arthritis, the GLP-1 weight loss and obesity medicine.
Full disclosure, Skyrizi ads have actually appeared. We've heard them on Bloomberg.
Oh, okay. We have, Skyrizi,
Yeah, we just want to point it out.
I can't watch the NBA playoffs without being, I've memorized the jingles to these medicines, which I won't subject you to. I think ethically as a journalist, I couldn't recount it. And also ethically as a radio program, we shouldn't subject people to my singing voice. But to your question, there's those medicines which have a sort of, there is data showing that prescribers are more likely to prescribe them if the patient asks about them. And so you can imagine the feedback loop by which you put them in the minds of the patient. And if they have, for example, psoriatic arthritis, which is a fairly common disease, then there might be something there. So that's one tier. You go below that, and we were just seeing on one of the feeds here an ad for Keytruda, which is a cancer medicine, which, cancer is fairly common, but it's much rarer, and these are rarer genetically defined types of cancer that it treats. It's hard to imagine the patient who would be exposing his or her doctor to the most widely prescribed cancer drug after seeing it on television.
Like if you have cancer and you're talking to your oncologist and you say, hey doc, I saw this ad for Keytruda, why don't we try it? And the doctor's like, wait a second, that's a really good point. Maybe we should try this as part of your treatment plan. Maybe get a new doctor?
Yeah, you as a patient should perhaps consider things. But it is part of this ecosystem. Like I said, there is data showing a correlation.
But to be fair, I think we're assuming that all doctors are up to date on the latest and greatest.
But I guess if you're seeing a specialist who is prescribing the type of medicine, because you have a condition that Keytruda, this specialized cancer therapy, would treat.
Can we assume that they would know about it?
I hope we can.
Okay.
I mean, if in that case, you'd be seeing an oncologist, which they should be up to date on all of these things. But
different oncologists specialize in different types of cancers.
Sure, and there's community center oncologists who maybe are not attending each conference and subscribing to all the relevant journals. I think what's interesting is, like I said, in the more common diseases, like for psoriasis or psoriatic arthritis, what we know is there's a lot of switching in that market. Patients respond to one therapy, stop responding to it, get switched onto another, their insurance pulls it, whatever. And there, I think the concept of brand marketing actually sort of makes sense in the way drugs are marketed in the United States.
Does it help drug companies keep their drug going even after it's off patent versus generics? Like if you constantly see the commercial, you're like, well, I want that one. I want the brand name. I don't want the generic.
Very much so. We've seen data in the past about how drug companies will escalate their advertising spending toward the end of the patent life of medicines because they know that generic competition is coming. And if a patient goes into a doctor's office and says, I want, let's say, just brand X, to not like paint anyone with a broad brush, the doctor may be more likely to prescribe the brand name than the generic because it was asked for.
Interesting.
Okay, so let's bring in what Bloomberg News reported earlier, that we could start to see a wind down here of this. Obviously, it's a big market when it comes to advertising. What do critics say is wrong with the industry?
In terms of blanketing the airwaves with these things,
Correct.
is that it can contribute to a misgotten idea of the safety and efficacy of these medicines. You watch a 30-second spot of a happy middle-aged couple throwing a ball back and forth. Maybe that's a little too Norman Rockwell, whatever. And then at the end, don't take this if you, et cetera, et cetera, et cetera.
Yes.
That can contribute to misconceptions of actually how these medicines work. I think what we understand, what my colleague Rachel Corzang reported, is that the government is looking at two potential ways of reining in these advertisements, both of which have been floated before. One would require Congress, which would be passing a law that stopped pharmaceutical companies from claiming as a tax deduction the business expense of these advertisements.
Okay.
Which that, I've been told many times, is probably a non-starter legally, because if you think about it, every company doing business can write off its business expenses, except this one, which is very strange and probably vulnerable to a legal challenge. The other, which the FDA could do, I don't want to say by fiat, but would be an FDA policy, probably would also get them immediately sued, but would be to change the rules of those safety disclosures at the end of the ad. Instead of saying, I think they have to list the top X number of safety issues or common side effects and then point to a website or somewhere where you can get more information, they would instead require them to list all of them. Which is to say the ad could be 4 minutes long and be mostly just a disembodied voice telling you that you could get shingles or whatever from a given drug. And so the conception there, I think, is that it would kind of bully drug companies into stopping doing that, or instead doing what they call disease awareness ads, where you don't mention a drug or a brand name, you just say,
I've heard those with celebrities.
Yeah,
And then at the end, it's
disease,
like, and then it's like, this is brought to you by this large drug company, and you're like, wait a second, they must make a treatment for this.
Exactly.
Yeah.
But as long as you don't name the brand of the drug, you don't have to go through the
That's
rigmarole.
interesting.
Did you ever stop the commercial, right? Like all that fine, right? Like it's just crazy,
No, of course
right?
not.
I
It's like,
know.
It's like, do you ever read the terms and conditions when you click?
That would be a no.
Exactly.
I got to get to
it's
the
just
app.
the way we roll. Hey, speaking of the way we roll, Damien's got to go soon, but I wanted to get in a last question about Eli Lilly agreeing to buy the gene editing biotech company Verve Therapeutics, $1.3 billion. It's the latest investment in an experimental medicine that could fuel its long-term growth. We talked to a Nobel laureate about CRISPR last week.
We did.
Was that last week or 2 weeks ago at this point?
Yeah,
I don't
was
know.
that Bloomberg Technology,
Yeah, Bloomberg
right?
Technology. It was pretty amazing. Jennifer Doudna.
Sure.
Is this what Verve does?
Yeah. Yeah, so Verve uses that same CRISPR genome editing technology. It's evolved maybe over the years, but it's the same basic principle to edit the DNA of people. And so their most advanced product, which is still in clinical trials, would basically basically introduce a genetic error into your DNA that would make it to where you just didn't have high cholesterol anymore. And that may sound kind of frightening, but in many ways, this is seeking to replicate something we see in nature. This whole pathway was discovered because there's people walking around who have a genetic disorder, I guess, or a genetic error, such that they don't make a gene that, I should say, encourages the production of bad cholesterol in your body, or slows the clearing of it. So these people are just walking among us with really, really low cholesterol, way lower risk of heart attack and stroke, And so this is science seeking to replicate that aspect of nature, but using, highfalutin CRISPR.
Bring it on and keep up with the French fries. Just saying.
There we go.
And the red meat.
All right, Carol's lining up.
I am. No, I am blown away by this and kind of where this takes us next. So maybe we can continue this conversation at a future date. Damien Gardet, he is Bloomberg News health reporter, joining us right here in our Bloomberg Interactive Broker Studio. Hey, folks, we got to get back to what has certainly been our top story on this Tuesday, and that is what is going on between Israel and Iran. We did have some reporting by our team here at Bloomberg about President Trump did meet with his national security team in Washington earlier today to talk about the escalating Middle East conflict. That's according to folks familiar with the matter. So fueling some fresh speculation that the U.S. is on the verge of joining Israel attack on Iran. We want to go back to D.C. and check in with a really great member of our team.
Usually he's in D.C. He's in Calgary,
right.
Alberta, Canada today. Bloomberg News national security team leader Nick Wadhams. Though the office, Nick, does look like the other offices of Bloomberg around the world.
Yeah.
Sitting in a chair in front of a Bloomberg terminal. So could be in Canada, could be in the U.S. No, he's in Canada. Hey, Nick, appreciate you joining us. Thanks for also sticking around while we were wrapping up that other interview. I want to get from you the latest that we're hearing from the team on the ground in Washington, D.C. about possible escalation when it comes to this conflict. What do we know?
Well, we do know the president had a meeting of his security team in D.C. He came back from the G7 early to deal with this crisis. The big question, of course, is what now? So it seems that there are essentially two options on the table. One is the U.S. gets involved, and potentially, the big speculation right now is that it contributes a very unique and massive bomb that it has to essentially take out the Fordo nuclear site in Iran. Israel can't do that and would need U.S. help for that. So that's one potential option, and the other is another effort for diplomacy. So we've had Israel saying it's completing its goals with Iran, but it's not there yet and needs more time. So you could see President Trump essentially continue with this line that the U.S. is not going to get involved militarily, but is going to try to use the Israeli pressure to push Iran back to the negotiating table. So we're really just waiting to see what his administration chooses between what are seen as those two options.
Nick, is this why the president came home early from the G7 meetings, President Trump? I mean, I don't know, we were chatting in the newsroom, and it sounds like he doesn't love these meetings, but he did stay for the group photo, did meet with some leaders. But I'm just curious, what the conversations were about his early leaving. Was he planning to do this, or did this just come up last minute? What I don't know.
Well,
what do we know?
I mean, it was announced last minute, obviously, in the White House conversation. What they said was that he had to get back to deal with the Middle East. But you put that on top of what we also know about this president, which is he generally is not a huge fan of these summits. And then he had done sort of what he wanted to do in part. Yesterday when he was here, he made a little progress on a trade agreement with the UK. And then you also look at what the agenda was for today. It was really going to be about Ukraine and bolstering G7 support for Ukraine. So, big question, was that something that the president felt was going to be worth his time, given how much he disagrees with the other members of the G7 on what to do about Ukraine? I mean, in his first sort of public moment at this summit, he made a pitch for Russia to come back into the G7 and make it the G8 again. That's something, obviously, that other members vehemently oppose. So he sort of came looking for spoiling a little bit for a fight. And let's just say it was not seen, it was shocking that he decided to bail out at the last minute, but not seen as a huge surprise necessarily that he would have cut his time short here in Alberta.
And I just want to mention on Ukraine, Canadian Prime Minister Mark Carney did unveil some new measures to support Ukraine ahead of a bilateral meeting with Ukrainian President Volodymyr Zelensky at the G7 meeting, and talked about $2 billion Canadian, or about almost 1.5 billion US in support of the Ukraine military.
Hey, Nick, if the U.S. were to aid the military effort of Israel in some way, be it perhaps with the B-2 Spirit dropping a series of bunker buster bombs on this nuclear enrichment site that you speak of, that you and the team have written about, what does that do to the U.S. relationship with other countries in the Middle East that President Trump touted as strong partners in recent weeks?
Well, it's a great question. I mean, we're still trying to sort through the dynamics here. Obviously, there would be a high degree, I think, of discomfort because generally speaking, the desire in a lot of these countries is to de-escalate, to ease off the conflict and essentially stop the fighting. So while Iran is an adversary with Saudi Arabia, those two countries have taken steps, gradual steps, in recent years to not necessarily patch things up, but take a slightly less adversarial role. So, what the countries in the region really want is a greater sense of stability. The other issue, of course, is that if the U.S. does join this attack, that does raise the possibility that U.S. forces would be hit in the region, and the U.S. has forces all over in the UAE and Qatar and elsewhere, so it opens up the risk that those neighboring countries where the U.S. is close partners with could open themselves up to attack because Iran says that it would potentially target U.S. forces.
All right, going to leave it there. Hey, listen, Nick, thank you so much. Nick Wadhams, Bloomberg News National Security Team Leader, as we mentioned, still there at the G7 meetings in Canada.
Yeah, to Nick's point, I want to point out that the headline from the New York Times crossing just in the last 30 minutes or so that American commanders have put troops on high alert throughout the region as fears of a wider war grow. Iran preparing missiles for possible retaliatory strikes on U.S. bases, according to officials. Again, that's from the New York Times.
All right, we're going to continue monitoring all of that. I'm Carol Massar, along with Tim Stanovic. Let's take a look at some stocks on the move today. We're joined now by Bloomberg News cross-asset reporter Denitsa Sukova. Denitsa, let's start with JetBlue. It was another down day for this company.
Yeah, another down day. The year-to-date loss is now 46%. Today, it closed down 8%. It's coming after news about cost cuts, eliminating some of the roads, restricting of this leadership ranks. The company has been doing so many things to overcome that weakening demand in travel, which obviously a lot of those airlines have been something that's been coming in their coast more and more. We recently had a partnership between United Airlines and JetBlue, and there was some optimism there about sharing points and kind of the two companies benefiting from each other. But clearly that wasn't enough. JetBlue withdrew their full-year financial outlook in April, and the cost-cutting measures are not so well accepted by investors because clearly this signals more trouble in the company. And as we said, it's down more than 40% year to date, and a lot of pressure for airlines and travel more broadly.
Well, that's where I wanted to mention, right? Like we saw in terms of the airline names, most of the major names, if not all of them, if you look at some of the super composite airlines index in the S&P 500, all of them were down today. So it was not an easy day. But JetBlue, the worst performer, as you said. JetBlue, ticker JBLU, down almost 8% in today's session.
All right, ticker HUM, Humana, shares higher today. What's going on with Humana?
We're having some good news there. The company is up 3% today. There are two parts of the story. So it had a good investor day. So we saw a lot of optimism, some upgrades. For example, KeyBank Capital Markets is saying that investor day provided a clear picture. They gave a big plan that's all the way to 2028. So there's like some measures for cost cuts, some measures to increase clinical excellence. So most of analysts had a pretty positive reaction. There is one downgrade from Bank of America, which actually maintains neutral but lowers the price target. Sorry, it's not a downgrade. But also the other thing moving is in the Senate, they abandoned one of the parts of the bill to cut costs in the Medicare Advantage program. And this is actually boosting Humana and United Healthcare because obviously they're largely relying, retired Americans are largely relying on this, and this is good news for the stock. The stock is still down 5% year to date, but today much needed boost, and we're getting